I want to record a quick video about the recent pound yen trade that we took, that we sent out in the Telegram channel. Okay, this was a trade that we sent the public channel as well as the premium subscribers. So in this video, what I want to do is I want to break down why we went short. In fact, I did talk about this in our market outlook trading video. I did share with you what I expect the market to do, and this is what exactly happened. If you didn't watch the market outlook video, please go back to that video and watch me go through this even before this movement happened. So in essence, what I mentioned was that price would hover around here, spike the trend line, the descending trend line right here, and then start selling down, and that's what happened. So we actually went short at 152. So let me just mark out the level of 152 and then break down why we went short and our profit targets. So we went short somewhere over here. So on the daily chart, you can see that the overall trend is looking like a descending triangle right here. So you have, of course, the horizontal level here and you have the descending trend line. So naturally, in a descending triangle, you want to short at the top. You don't want to short in the middle, you want to short at the top. So that was the first reason why we were looking to short. Now, if you were to go onto the H4 chart, you can see this very ugly looking pattern over here. Let me just clear these lines first. You can see that there was some form of resistance coming around here. And this is deliberate. This is a deliberate move by the market to trip stop losses. What do I mean by that? It's a play by the market to collect stop losses. Traders who say that, okay, look, this looks like it's going to reverse. They start shorting here and they put their stop loss above. Now, if you were to pay attention to the market structure right over here, just look right here, you can see that this is actually a supply zone. So price was very sneaky. Price consolidated here, trip all the stop losses, get the sellers to come in here, put the stop losses above here, and then they pump price up first with this big bar, which looks really bullish, right? If you've been trading with the trend, then on the H4, you would see this as a double bottom, and then this will be a low, this a high, higher low, higher high. So you would see this as a valid breakout. So what happens is a lot of people would have bought here, but they're actually buying directly into supply. So if I were to just drag this out, you can see that price actually tapped this supply zone nicely and started selling down. Now, our entry was 152. That means we didn't get the top prices, and that's fine because we wanted to wait for confirmation. We wanted to validate that this whole setup was indeed what we were expecting, and that's why we waited for price to show more bearish. So at the bare minimum, we wanted price to close below these highs over here. The highs that were created, what I call the fake highs, because what they're doing is they're just trying to collect stop losses. So when price came down right here, we started selling, and that's why we sent out this signal over here at 152, and our stop loss was just 30 pips. So this is how our trade actually looks like. We went short somewhere here and our stop loss was about 30 pips. So this is how it looks like. Now let's talk about why the stop loss was set at this level. Very simple. So we go short here, we view this as a fake out of this level, so naturally our stop loss has to go above this level. We didn't want to set it above here or above here because that would be very wide. So naturally we opted for a tighter stop loss, because if we have a tighter stop loss, then our risk to reward will be very good. Now in this case, this trade went on to hit our final take profit of 150 pips, which is 150.5. So in the end, it went all the way down here, 0.5. And this was a very nice trade of 1:5. We risk 30 pips, we make 150 pips. So this is how we structure it. Of course, even if you do it something like that, then the risk to reward is still okay, but we had the experience to tighten the stop loss and just put it at 30 pips, just like that. This is a very good case study. I hope you got value out of this. Remember, this is one of the setups that you can focus on. Now, this pattern is very simple. You want to look for supply zone or demand zone. Again, I've recorded videos addressing this concept on this channel multiple times. So just check out the channel, type supply and demand, and you should be able to find it. I also have other videos on this channel to help you become a better trader. So do hit the subscribe button if you haven't already done so. But anyway, just focus on this one setup and it's really more than enough for you to get big winning trades like this. You don't have to catch a lot of trades, you just need to catch one trade like this. And you know, this kind of trades is giving you good risk to reward. You don't have to catch 10 trades, 20 trades in a single week. You just need to catch one of these trades and you do this 4 times a month and your account is already going to be growing at like 20-30%, and that's a very good growth rate already. Okay, so just summing up this video, the first thing that I recommend that you look out for if you want to trade this kind of setups is you want to identify supply and demand. The next thing is that you want to look for consolidation near the supply level, okay, not at the supply level but near the supply level. Notice that this is a supply level but the consolidation happens near the supply level, and collect all the stop losses above here. Now the last thing that you need is you need confirmation, you need price to push up to hit the supply zone right here, and then after that you need price to come down to validate that this is indeed a fake up. Okay, so this is a very powerful concept. I really hope that you apply this because this can really make you a lot of money if you really master this. Okay, so if you need to rewatch this video, please rewatch this video. If you have any questions about this concept or how to find this kind of trades, or you want more analysis like this, please let me know in the comment section down below. Okay, this week has been a difficult week at the start, but right now we are recovering and hopefully we will end the week with profits. Right now we are doing pretty good and our Aussie yen trades is also doing good. So I hope you trade safe, I hope you manage your risk well. If you are a new subscriber on YouTube and you have not yet joined us on Telegram, I will leave a link to this Telegram channel in the description down below. I also have a free day trading guide for you. So what you can do is you can just scroll down to the description. You can join us on Telegram and get your free day trading guide right here, or you can also find the links in the pinned comment. It will take you to a page just like this where you can input your email, right? Please use a legit email because we will email the download link to your email. So if you do not put a legit email, then you will not receive it and you will not be able to download the free day trading guide. So you can see right here that this free day trading guide is no fluff, it's full of value packed information. It's perfect if you're a beginner. We don't just tell you the stages of the market, how do you identify it. We don't just give you the candlestick pattern cheat sheet. We also show you a good strategy that you can use even if you are a complete beginner right over here. So this is totally free, there's no catch, there's no credit card. So please go grab it if you're still struggling. This is where I recommend that you start if you are still struggling to turn a profit. Okay, this is just a way of thanking you for supporting the channel. Okay, right, do appreciate your time. I'll catch you in the next video.